As we correctly predicted together yesterday, we had a suspicion that inflation would either be at the levels or possibly even better. And what a difference 24 hours can make. The markets went super green as Wall Street pushed and squeezed some of the biggest bears out of the markets. But is it too early to celebrate? In today's video, we take a look at the structural changes of what just happened on the markets and what it means for us as investors and traders. But more importantly, we also take a look at some of the sneaky dark pool transactions that just went on along with the options flow. But maybe it's the data that really should be looked at in more detail. The US 10-year obviously dropped, which is a great sign, and the US 2000 is doing something very exciting indeed. Today, we take a look at the next 6 and 12 months for that particular market, along with the squeezes and liquidations of the crypto market. Guys, a lot's happened. Let's talk about it right now together. Well, welcome back everybody to the Daily Show. My name's Tom, and firstly, a big congratulations that anyone was able to go and snag up some of that rally over the last 24 hours. Yes, we had kind of some suspicions based on the previous PPI numbers that when they came in kind of good, then usually core CPI would either come in at or even softer. And that's exactly what did happen. It's still a 100% stat and something we can look forward to using potentially in the future if we have similar situations. But was it really that good? Well, of course, not really. As we know, these data numbers are just used as excuses for Wall Street to punch us. And in this case, core CPI came in at 3.248, which was rounded down to 3.2%. So basically, if core CPI came in at 0.002% higher, we would have actually seen it rounded up. And of course, this is the difference of how fast things can change in markets. And more importantly, why we need to take these kind of, pieces of information at face value and just say, you know what, yeah, that's cool, but let's look at the structure, let's look at the dark pools, and let's see where Wall Street's really been transacting. First up, let's have a look at the flows. The flows were good over the last 5 days. Home builders, regional banks, financials making up some of the top ones. And as you can see over the last 24 hours, people were really bullish on this earnings season kickoff. Yeah, some of these banks made lots of money. We'll look at that soon. And KRE was also coming along with semiconductors and all of the good stuff that you would usually expect. Defensives were the worst. And again, this is not traditionally what you see in a bear market bust, in a sell-off that's going to be happening. This was a bullish day and certainly one where the bulls were winning out. Now let's look at some stats. If this is the bottom for now, and we kind of expect that it may be so, then if the Russell 2000 small caps start to improve and break through some of the key levels, could we be looking at some exceptionally good stats for the rest of the year? Well, remember when the previous year was positive and we've gone back down to the 200, it usually forms a style of V-shaped turn, or at least a fairly bullish kind of next 6 months and 1 year gain. The gain percentages are nothing to sneeze at. And could it be finally the year of small caps? Tom Lee, Fund Strat, they've been going on about for about 12 months. We've obviously liked it for about 3 months, but that recent shakeout will have taken many people with it. So something to be looking at and also to be considering because of year threes of bull markets. This is what happens in year one. This is what traditionally happens in year two. And you got to remember, we are kind of following this type of thing. And even we're following that kind of, slower weirdness that happened near the end of the year. And now we're in year three. Now, year threes tend to look pretty boring on the charts, but realistically, there's a lot going on. Tons of rotation, tons of different things to look at. Make sure to subscribe to the channel if you haven't already, because we'll be covering all of that. And I would like you to pause the video right here and say, what do you think the worst stock is in the market right now for the Dow? What would be the worst stock of this year? If you answered straight away Apple, then yeah, you're pretty smart, because yes, it's actually the worst stock. I bet you not many people would think that, but this is the point of rotation. Chevron, the best performer. United Health, second best performer. And then of course, a couple of the banks, which will be coming out as even better performers now that we've seen those earnings. So some good stuff happening here and a lot of rotation occurring. Let's go through some of the numbers we discussed over the previous kind of couple of sessions. First up, US dollar. As you guys know, really key here to look at these US dollar moves. Very bullish dollar, hitting the daily sentiment above 80. And when that's happened in the past, what has it meant? Well, it's meant that it's a potentially topping of the dollar, along with a pattern that's pretty cool as well, which is an evening star. And of course, it's meant that maybe gold is ready to go once again. Now, if you've been a long time watcher of the channel, you would know that since $1,800 an ounce, we've been incredibly bullish gold. We were bullish at all of the last year and a bit, and it's been one of our best performers. Now, do we still think it's going to get to $3,000 an ounce? Yes, of course we do. I think it could even do better than that. But as you can see here, whenever we've seen that kind of dollar move, this is what gold's done over the next 12 months. Pretty impressive stuff, certainly worthwhile paying attention to. Now, earnings is still going. It's just kicking off. Remember, there's a lot to go through. Banks so far, big tick box approval. TSMC, 8.4%. The vol's not gone yet. If this one doesn't perform, markets could really tank. So we need to make sure that, of course, TSMC does come out with the goods. And if it does, markets will like that and, of course, potentially break some key levels. Remember, the percentage of stocks that do well over this earnings season could also help us to really dictate that last 1/3 move. And in similar situations, there's still been more bull to go. So even if you're feeling bearish, if the facts are that the markets are really seeing what they want to see, don't go against the markets for now. One of the other announcements is Hindenburg, which is a well-known big short seller, just closed up. So what's that showing you? It kind of reminds me a little bit of 99, 2000, where some of the best bears, really smart people, by the way, started to close and stop doing the bearish positions because they were just getting destroyed in the markets. They ultimately were right, but they got the timing wrong. Could that be the same story here as Hindenburg kind of wraps up after maybe taking a lot of heat and not liking it that much? BlackRock's assets under management, wowzers. I mean, this is just absolutely telling. Huge numbers here from BlackRock. And of course, it shows you that investor flow is still very positive. And take a look here. I'm sure Jamie Dimon is smiling with his lobsters on a yacht because look at that profit. Yeah, that's corporate greed right there, guys. $60 billion basically. That's some big numbers. And you can't say that banks aren't doing well. So with deregulation potentially on the cards under a Trump administration, you can only imagine where the numbers could get to. Let's have a look at Bitcoin flows and Ethereum over the last 24 hours. These are delayed, of course. We'll get updates. You can see as of the 14th. I'm pretty sure it's going to turn super positive, but here are the flows anyway from the 14th. 15th will be positive. We'll update that over the next video. Let's have a look at the short sells. These are updated ones to the point right now. And you can see here that shorts got absolutely smashed over the last 12 hours, which is pretty much all through CPI. So that's the CPI number. At the time of this recording, that was 12 hours ago. So basically, yeah, you can see how many people got liquidated post CPI. And this is just what the market likes to do. Now let's explain what was happening. We shared all these ones. We've got some new dark pools in a moment. Big trades coming in. Market, of course, has ramped off that. That was the S&P. Morgan Stanley, big trades, markets have ramped off that. Huge sweep levels on the banks, markets have ramped off that. Pretty telling there. Nvidia, 2 times leveraged, obviously they've gone up. And Bitcoin also down near the lows, third largest transaction, boom, bang. The market comes out, big guns. So if you don't trust dark pool, remember it's dark pool with price action that is key. MSTR also getting a monster transaction on it over the last 24 hours. Coupled up with number 1 levels. Could it be that MSTR is now bottomed? Remember back over here, we said that MSTR would have 1 to 3 months of sideways action in a pit, which is a pullback in time, down to sideways. Seems to be forming a base now. Obviously, if Bitcoin is going to have another run on it, MSTR will do okay. So good signs there out of that one. Better signs though for some other markets. Let's have a look here. 1,000 growth ETF Russell, biggest transaction ever over the last 2 years. Plus, so that's like the last 5 years. This is a huge deal. The last time we saw transactions this big ended up being a massive pivot in the markets. Remember, this is coming off a bullish run, so it's possible it's a short, but I would say it's more likely it's probably a buy. So, of course, we'll have to look for this in the price action, but yeah, wow, massive transaction. And speaking of massive transactions, 2 huge ones coming through the US 2-year notes. So not the TLT yet, but 2 massive transactions through yield notes. Last time we saw this, we got a massive move from the yield. So basically, it could also spell that we are in a top here when it comes to US 30, US 10, all of those yields we've been discussing. Guys, let's have a look at the structure now for the S&P 500. Out of the gates, really strong, held it. Obviously moved past 5930, which is key, above 5900, so we're back in positive gamma. And now we deal with the downward trend line. So as you're going to see here, that's really the last real bear level. And whether you're looking at the NASDAQ, the S&P, or even the Russell, you're going to see they're all at these reses coming into the TSM information. Now, even if the markets now drop off, because we cleared 59.30, there's a good chance that 58.50, 58.40 will have buyers. Couple of reasons why: previous supports and resistances, but also massive dark pools that are most likely going to hold it. Remember, there's so much transaction going on here. And the way that funds transact is they don't just buy one price, they tend to buy a grid of prices within a range, and they get very excited about defending that. So good chance that even if we drop down, we're probably going to defend. If the markets do rally through, get through 6K, of course, that makes a higher high. New all-time highs incoming. 6,200 would be the next minimum target that we'd be looking at. So some good stuff there in markets. When we go and have a look at the S&P from the gamma perspective, positive gamma now on the next day. For the OPEX, we're still looking at 5,900 puts everywhere. So it becomes a little bit more jumbled. We'll update that just before this OPEX expiration. But yeah, you can see here 59.50 is the call wall, which just so happens to also be, yeah, you guessed it, the trend line. Now let's have a look here at Tesla. Positive gamma all day. Looks like we're kind of going towards 440, 450. Nice pickup, lots and lots of calls. 450 becomes the obvious strike that you would have to look at if you are a buyer there. Congrats if you are. I'm not at this stage. We were, but at this stage, I'm just kind of watching and seeing what happens. And then, of course, 136 on NVIDIA, back into positive gamma, back above 135, 140 plus. I'd say we're probably going to go to an all-time high. Remember, BOFA has 190 on that stock for this year. Now let's have a look at the banks. KRE regionals, that does not look bearish to me. Looks like it kind of went bullish. If we look at XLF versus SPY, again, the bulls are back in financials. That is usually not a bearish sign. And if we have a look at XLF in general, new high, breaks that downtrend. Yeah, good stuff. So really good structure coming through there. The American consumer, XLY versus XLP, improvements across the board. Nice stuff there. US 10-year obviously drops off. One to watch. Of course, we're looking at this in the 30-year. We already talked about how there was a good potential sell signal on the US 30-year right at the peak. And at this stage, you know, that's kind of starting to play out. And obviously treasuries seeing a nice little gain off this. Are we out of the problems yet with yields? No. I think you're probably going to have to break this alert, which is like 88.30. We have started to see some treasuries getting big trades in them. I'm looking for that big one on TLT though. I'll report back when we get it, guys, and obviously sub for that. What about bonds and yield spreads? They look okay. Again, dropping down. That's a good sign for the bulls. And the US dollar did drop, but then it regained off the 20. So remember, this 20 is a big deal. I've set a little alert underneath this lower low. If that happens, then there's a chance that maybe the dollar is really weakening. And another one to check out as well is the Euro USD, which if you have a look on the charts, you can see pressured that 20. And obviously, if this breaks to the upside, it's also going to be breaking that downward trend. And again, this is all kind of coinciding and synergizing with each other. So that'll be a big deal. Silver and gold, both going well. Gold set the alert above 27.30, guys. If that happens, good signs. Could be out of its kind of pit. It's pulled back in time for now. So gold looking good. And obviously, energy stocks doing well. Energy surprisingly went up. As I said, I think that this is kind of a good TP zone, but energy did bust this high. If we get underneath this level down here in the future, that'll be the end of energy for now. But yeah, I'm not taking this trade anymore. I think it hit a great level. If you're still in it long, congratulations to you. It's obviously doing quite well. What about Tesla? Moving towards 450 could be the key here for Tesla. And certainly it looks more bullish. Semiconductors holding the most important area they could. TSM will be the decider here. NVIDIA waiting for TSM as well, as you can see. And HSI doing quite nicely with a nice little recovery. Look at iron ore price for this one. And I'll show you guys it right now. I often use iron ore for China. And you can see here, it's right on that res. If it gets a really good, strong week close, I think things are looking better. So we'll update when that happens. Speaking of big closes, what if we get above 2,300 on the Russell? That stat could be coming true, could be a great one for this year. So the Russell, obviously, when they are just at the resistance, similar to the S&P, but different total, different structure. Looks pretty sweet if it does break through. NASDAQ at the trend line. Again, if it pulls back because it did break through a little bit of structure here, you've got to think buyers are going to be there. 20,800, 21,000, that kind of level where buyers could be looking for dark pools there. really cement it. If we breach this downward trend line, again, all pullbacks, you'll want to be looking at buys. So market's really changed a lot after the CPI. Solana, same thing, new high, looks good. If it comes back down to 189 now, you'd want to be probably looking at the buys. Same thing with Ethereum, most traded zone 3250. Therefore, if we've got that the most traded zone, if it comes back down there, you'd have to expect now some buying pressure. And for Bitcoin, really strong out of the gates there post CPI, jumped like 3,000 straight away. If it does come back to 95, you'd have to think of buyers there. But in general, really good stuff out of the cryptos. And obviously, if crypto is going to do its stuff, January, February, March, April, and May should be theoretically positive. Guys, if you enjoyed today's video, remember to subscribe. Also, just a quick reminder, we will be posting a lot of tips for 2025 about psychology and how to get ahead in trading and investing. Make sure to follow me on LinkedIn. That's where I'll be doing it. It's a total game changer when it comes to really getting good at investing and trading. Remember, you must be good at managing yourself before you can really be successful. If you enjoyed today's video, make sure to subscribe. We'll see you in the next video. And obviously, earnings season is just kicking off. TSM, what's going to happen? Let us know your guesses down below in the comments. Bye for now.